how did Bitcoin make sense for you with the military background, with founding companies, with the internet adoption, living through the internet adoption? How did Bitcoin make sense for you there?
Well, so there's a number of things. There's a great book that Michael Lewis wrote called Liar's Poker. He's the same guy that wrote Moneyball and The Big Short, which became great movies. But Liar's Poker was all about wealth management. And he used to comment being in his 20s, knowing absolutely nothing. And they would hand him millions of dollars to manage on behalf of other people's money. And he would get paid 300, 400, 500,000. And he's like, I have no idea what the hell I'm doing. Why do these people give me this money? You know, what's going on? And so when you read that book, you sort of realize like, wow, I really need to learn about money. And I thought I could trust a third party to know what they're doing, but this is a disaster. So, you know, when I had sold the first company to Cisco, I took me and about 7 other people because we made so much money. And, you know, I organized a deal with Goldman Sachs Private Wealth Management. So I was thinking, great, like Goldman Sachs, this is the gold-plated best on the planet, and I'm going to get to have their help managing my money. And then I realized every time I would go meet with them that I felt like I knew more about the markets, and I felt like I had spent more time learning about what was going on in the economy and on Wall Street. And I felt like I was talking to, you know, folks in their 20s who were very well-intentioned, very smart, but they were trained to believe the best product on earth is a Goldman Sachs product. So, oh, you want a fund? Well, it's a Goldman Sachs fund. And if you said, okay, what are physical assets? What are financial assets? What are virtual assets? They would give you a strange look, right? They would just think, okay, physical assets, I get it. You know, gold, silver, real estate, card collections, artwork, you know, okay, I get it. Financial assets are like, okay, stocks and bonds and ETFs and all these things. And then it's like virtual assets. What are you talking about? You know? And I'm like, well, like digital assets. And they're like, what do you mean by a digital asset? And then I'm like, you know, Bitcoin. And they're like, oh, no, we don't touch that. We're not allowed to do that. That's very, very risky. That's, you know, high risk, high volatility. Like, are you crazy? It's like a 60-40 bond portfolio equity split. And I'm just like looking at him and didn't understand it. And what I really understood after the Liar's Poker and those interactions was that nobody cares about their money more than I care about my money. And I shouldn't be outsourcing the most important part of my life, which is my wealth, my personal sovereignty, and the approach that I take to combat the fraud of every central bank on earth and the Rothschild family bank, which we like to call the Federal Reserve. And the more I dove into the history of currencies and money and trading, and then watching what I was doing as a CEO in the way private equity worked and venture capital worked and angel investment worked. And then when you go on these paths and you end up in the public markets on Wall Street, you just realize it's all bullshit. It's all fraudulent. The whole system is a casino. And the whole concept wasn't that anyone on Wall Street was so brilliant. It was basically that they were getting to do insider trading in a legal way. They could put themselves in their own IPOs. They could manipulate the way IPOs worked as to who got rich. And then, you know, we have to protect you as an institutional accredited investor. So, you know, Robin, you're not allowed to buy that IPO because it's risky. Well, it's risky when it's priced at $15, but when it opens at 60 or 90 or 100, then we'll let you buy, Robin, because now it's no longer risky for you to buy it at 400, 600, 800% higher. And the longer you spend time just peeling back the onion and working through it, the more you realize something's terribly wrong. So with Bitcoin, I felt bad that I got into it a little bit late. Obviously, it was around as we were getting through the 2008 explosion of the financial markets during that bubble. That was the bubble after the bubble I saw with the internet and technology in late 2000. And then you kind of realize, okay, these people managing the economy are like Asset bubble, blow it up. Asset bubble, blow it up. Oh, how do we solve the problem? Just print money. Well, wait a minute. When you're printing money, you're stealing from me. And then you start going through all these crazy things about, okay, wait, why is 2% inflation okay? That's just 2% theft. Why? So then I started doing the math because I'm an engineer, right? And you said, okay, if you and I work from like we're 20 to 70, that's about 50 years. Let's say you worked from 22 to 72 or 18 to 68, so somewhere in there, 50 years we're going to work. 2% inflation, because math, means that we're going to lose half of our wealth in fiat dollars. Half. And you start thinking like, why do I have to lose 50% of my wealth because they believe they can steal from me 2% per year and that's an acceptable rate of inflation? And that was frustrating. More recently, because math, we've watched nearly 80% of US dollars in the history of the world have been created over the last 5+ years. Well, what does that mean? Well, okay, if the target was 2% inflation, you and I could look at the PPI and the CPI and what the real basket of inflationary goods were, like when I was born in 1969. If you don't change the definition, inflation was probably 25% or more. So then you're going, wow, they're saying 2. It's over here at 25. So while I'm running a public company, I assumed our cost of capital was 25% per year, whether that was just a way to be safe or not. That was how we thought of it. But let's say you don't believe 25 is too much, 2 is too little. Let's pick like 14%, somewhere in the middle. Well, at 14%, in 5 years, you lose half of your wealth because math. Half in 5 years, which is what's happened to every American and anyone there that's pegged to the US dollar. That inflation is devastating. So Bitcoin to me was like, oh God, why did I miss this when it first came out? And it's mostly because I started the company that became publicly traded on NASDAQ February of 2009. So that's really close to when Bitcoin, the white paper was published, things are starting to get rolling. But ultimately, I was so consumed in the first 5 years of building a startup, raising money. We did 20 million the first 5 years, and then we did a couple institutional raises in the next 5 years of first 20 million, then 30 million, and so forth. So while you're doing that, I sort of missed Bitcoin for a while, which is crazy because I was from Silicon Valley. I was deeply in technology. I followed all these things, but it was really, I probably got really, really deep down the rabbit hole in probably the 2016 halvening and cycle. Going through the 16 halvening, the 20 halvening, the 2024 halvening, by now it feels like really old time. And back when I was getting involved, you could still get Bitcoin, under $1,000. I wasn't as good to catch it under $100 or under $10 to start at least, but at least that idea of seeing the difference between an asset growing at way more than 50% combined annual growth rate, you're like, oh, even if it's 25%, 50% or more, my purchasing power isn't getting decimated. My cost of capital isn't getting decimated. So ironically, I ended up raising money as a private company where you could use US dollars, Bitcoin, or Ethereum originally. Because I had people asking me, I said, hey, I've got Bitcoin or Ethereum. Can I invest? But I want to use that. And that sort of compelled me to get very deep into, wait a minute, what are these things? Why are they wanting to give them to me? And then finally we just said, sure, we'll take Bitcoin or Ethereum. Very rapidly, I converted all the Ethereum into Bitcoin. But then 10 years as a private company, I had already had a bunch of Bitcoin on our balance sheet. So when we went public, I literally had balance sheet Bitcoin before Saylor. Saylor didn't come till later. He had a much bigger company though. And then when we went to do our registration statement to go public, I was the first company that ever went through the cryptocurrency and blockchain part of the Securities and Exchange Commission. So the way that process works, you submit your registration statement, the SEC reviews it, gives you responses, questions, you have to revise your registration statement. Well, ours, those usually take 3 or 4 months to do that. Ours took 8 months, because the only thing worse than going through all of that with the Securities and Exchange Commission once is having to work with 2 groups in the Securities and Exchange Commission, the traditional group, and now this brand new blockchain and cryptocurrency group. Through that process, we discovered they were asking us, well, how should you cast this on your financials? And we're like, well, you're the Securities and Exchange Commission. You're FASB, like the Financial Accounting Standards Board. You control GAAP accounting for all public companies, everything on NASDAQ and the New York Stock Exchange, and you're asking us? So we're having these debates with them, and they escalated it to what they call the Chief Accounting Group, or the Chief Accounting Agency within the Securities and Exchange Commission. And we're having this open discussion about what do we do with Bitcoin on our balance sheet. And at the time, there were no rules. So they said, what do you think? And we're like, I think it should be mark to market, because there's a 24/7, 365 market. Yes, it's highly volatile, but we should just market to market, and whatever it is. And there's a public, persona for that. Well, ultimately, we get everything approved. I think we were the first company in the history of Wall Street that got through the registrations process without any rules from the SEC, but which we selected to file our 10Ks, our 10Qs, and we kept all the Bitcoin. And then once we got a registration statement, we used an ATM, or an at-the-money registration statement, to start raising cash to buy Bitcoin. Sound familiar? But we did, all of that. Like, we were kind of like GameStop or AMC before everybody learned about naked shorting and all these crazy games and the meme stocks. And then we were doing what ultimately MicroStrategy did, but we did it far earlier than them, and there were no rules. So we suddenly got into this weird dynamic where finally the SEC did the most punitive thing it could do, which affected us. It affected Strategy and all the others. They said, okay, if you buy Bitcoin, let's say you bought it at $50,000 for easy math, and it dropped to $25,000, and now it's trading at $85,000. Well, what they said is, if you bought at 50, anytime the price drops, you have to take an earnings per share one-time loss for the amount of money below the $50,000 purchase price. And you basically have to hold it that way. Now, if it went down to 25 or even 15 like it did, and now it comes all the way back up, you can't take any gains. There's no unrealized gains, but you have to recognize the losses. So it forced you to write down any Bitcoin you purchased at any price to the lowest possible value it ever traded at since you bought it. But you could never get the economic benefit for any reason until you sold it. So now that changed as of the start of this year, right? They said, okay, now we're going to market to market. So people were waiting, okay, Saylor, when are you going to recalibrate your balance sheet and your P&L to reflect its current value? And they deferred that for quite a while because there was a window where it was optional. And so it was just so strange. Personally, I just kept buying Bitcoin and stacking it, right? And you learn to hodl and make sure your stack never gets smaller, and you just keep building it up over time. But that was easy to do personally. That was really hard to do in a public company, because the public company is governed by directors, and then everybody's got to approve it. And then your auditors have never seen this stuff before. So they're terrified to go, well, we're the big four. We can't mess up something because there's no rules. And that was just a fascinating process to arrive finally, where now it's like, oh yeah, people are buying it for treasury. Oh, GameStop's going to do it now. All these companies are doing it. MetaPlanet over in Japan is doing it. Everyone's suddenly doing it. Semler Scientific. But back when we were doing it, like, we had more Bitcoin on the balance sheet when we were private as a company than we did it when we were public. But it was just fascinating to see the chaos, the sheer chaos of it. But then you become an evangelist, right? Personally, you become an evangelist in corporate, and then everyone's got to go through a process of either being hurt or have something stolen or lost to realize, oh, there's Bitcoin and there's shitcoin. There's scams and there's Bitcoin, and all of that makes you become a Bitcoin maximalist. But I almost think every 4 years we have a new wave of investors in crypto. And then they're taught, oh, you go to Coinbase and create some diversified portfolio of these digital assets, which is absolutely dumb. You should just say, I go there, I buy Bitcoin, I self-custody, bingo, I'm done.
That's such an interesting story. I never heard that. I always thought MicroStrategy basically was the first company that took it public. So you were actually with the company, the first publicly traded company on the NASDAQ that had Bitcoin on the balance sheet. You said you had less Bitcoin publicly. Did you sell in the process of getting public?
So, the whole process of when we went through it, initially we were just maintaining the Bitcoin that were part of our private financings. So in the last $50 million we raised privately, we ended up having probably the most Bitcoin during that raise. Now, there was lots of cash investors. We had a sovereign fund with like $20 million. We had corporations and venture capitalists and all that. But a lot of the angels were the ones that we would see, or the big family offices were the ones that would have cryptocurrency. And so if they gave us Ethereum, we would convert it. If they gave us Bitcoin, we would hold it. So initially, the process was just letting the Bitcoin sit on the balance sheet and holding it at the cost we received it at. We weren't even marking it up or down. When we went through at the SEC, we didn't realize what a circus it would become. And then when we started trading, it was funny along the way, our board, 1 year for our strategic plan, I asked our chairman of the board, who was an ex-CFO of JP Morgan's investment bank, I said, all right, you play the role of defending the US dollar for our strategic plan, and I'm going to take the role of defending Bitcoin for our strategic plan. And that process, very unlike Saylor had a wonderful board that actually was fully in tune with, I don't care about the volatility. We have our company, we're profitable, we're going to use our cash, we're going to buy Bitcoin, and we're going to hold it. And we understand it's going to be volatile, but this is the right way that we're going to do it. I had a board composed of people, none of which had ever bought any cryptocurrency. They had no Coinbase or Kraken account. They had never linked their bank account to Coinbase or anything like that. They had never used decentralized finance. They didn't know what Uniswap and SushiSwap were. They had no idea the difference between Bitcoin or anything else. They had never bought or custodied Bitcoin. So basically, I almost had to say, okay, we're going to get $100, little amount from every one of you, and you have to do this. And they're like, oh, I'm busy. And then I'm like, you have to do this. So we would have very contentious board engagements because I was the founding president and CEO, dragging people to look at this stuff, to pay attention, to do the homework. And what you realize is that it's great if you can get a group of people where, everyone is on board with the same ideology and they understand inflation and money and the history of collectibles and stores of value and mediums of exchange and units of account or measure. But what you realize is the fiat brilliant were Bitcoin stupid. And that's a hard thing for really bright people who sit on boards to believe that they're that juvenile about their mental understanding of something other than the Federal Reserve and the US dollar. Their view was the US dollar is the most conservative thing in the world, like buying treasuries. And I was like, are you out of your mind? I said, what's the supply of dollars? I don't know exactly what number of dollars are there. And maybe they could go, well, I could look at M2 money supply. And I'm like, okay, and you trust that the graph is accurate, that you know exactly as they're printing that money what the supply is? I said, I will suggest to you that it's the world's assets divided by infinity, which you can't solve that math problem, versus, the world's assets divided by 21 million. And every 10 minutes, I have an open, candid, transparent, fully audited public record with a ledger that shows specifically how many Bitcoin there are And we always know the math. So why do you think that you not knowing the math is more conservative than us knowing the math? I said, when has that been audited? It's like gold. When has gold been audited in the United States? Decades and decades and decades. No one even knows if it's there. Nobody knows if it's been rehypothecated, pledged out. Oh, but it's the hardest asset in the world. Well, no, that's Bitcoin, actually. So when you go through those mental conversations, it's brutal with a board, and it's even more brutal when you go out to deal with Wall Street fund managers. I mean, we did enterprise software. We made beautiful things that were like applications on the phone. And those apps had our software in it. That was the cloud business, so we'd license software. I did our roadshow, and people said, Alan, what's an app? Imagine that. What's an app? And my CFO and I are looking at each other going, are you kidding me? You don't know what an app is. Oh, okay. So you're starting at that level, and I'm like, wait, you manage $10 billion? I'm like, wait a minute, you're just making fun of me. Come on, pull out your phone. So they'd pull out like a flip phone, and I would just go, oh my God. Then other ones would pull out like an iPhone, and you're like, okay, you see that little thing on there? That's an app. Do you do your banking? Do you do it for travel to get your boarding pass? Like, that's an app. And when you're realizing that these folks manage that much money and they don't have the foggiest idea, enterprise software shouldn't be a hard category to understand. I mean, Adobe, out your way, SAP, these aren't small companies, right? So theoretically, they know that, but they don't. Then within that, they don't understand the verticals and the things. And then if you're trying to talk about treasury, it's like their mind explodes because you're trying to tell them, I'm being conservative. That's why I buy Bitcoin. I only put the corporate money and personal money into Bitcoin that I can't afford to lose. And they're like, no, that it's the opposite. I'm like, no, you're just wrong.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.